What if I told you the habit destroying your trading account isn't dramatic? It doesn't look reckless. It doesn't feel dangerous. In fact, you probably do it almost every trading session. It's so common. Most traders mistake it for being careful, but over weeks, months, and years, this one habit quietly drains your profits and keeps you trapped in the same cycle. Today, we're exposing the trading habit that silently destroys more accounts than most people realize. The obvious suspects. When traders lose money, they usually blame the obvious things: a bad strategy, bad market conditions, unexpected news, high volatility. But those things aren't always the real problem, because I've seen traders with simple strategies become consistently profitable, and traders with incredible strategies continue to struggle. The difference wasn't knowledge, it was behavior. The habit revealed. Here's the habit: constantly second-guessing your own plan. Think about it. You create trading rules when you're calm. Then the market opens, emotions arrive, and suddenly those rules become suggestions. You hesitate before entering. You exit too early. You move your stop loss. You skip a valid setup. Not because your plan changed, because your emotions did. The cost you don't see. The dangerous part isn't one bad decision. It's the accumulation of small ones. Every time you ignore your plan, you weaken your confidence. Every time you change a rule in the middle of a trade, you teach yourself that discipline is optional. Over time, your strategy never gets a fair chance to prove whether it actually works. You're no longer testing your system, you're testing your emotions. Why your brain does this? Your brain is trying to protect you. When a trade moves against you, it wants immediate relief. So it whispers, "Close the trade now. Move the stop loss. Wait a little longer. Skip the next setup." Those thoughts feel logical, but they're usually emotional reactions disguised as reasonable decisions. That's why this habit is so dangerous. It doesn't feel like a mistake. It feels like common sense. Legendary trader Jesse Livermore understood that the hardest battle wasn't predicting the market. It was staying disciplined enough to follow a well-defined plan. What consistent traders do differently. Consistently profitable traders aren't perfect. They still feel fear. They still experience doubt. The difference is, they don't let those emotions rewrite their rules. They understand that one losing trade doesn't invalidate a good strategy. One winning trade doesn't prove they're invincible. Their confidence comes from execution, not outcomes. As trading psychology expert Mark Douglas emphasized, consistency comes from executing your edge over a series of trades instead of reacting emotionally to individual wins or losses. How to break the habit. Here's a challenge. For your next 20 trades, make one promise. Don't judge yourself by profit. Judge yourself by discipline. After every trade, ask, did I follow my plan? Did I respect my risk? Did I let emotions change my decisions? If the answer is yes, count that as a successful trade, even if it lost money. Because disciplined execution is what creates long-term profitability, not occasional lucky wins. Closing the trading habit that quietly destroys your profits isn't a bad strategy. It isn't bad luck. It's abandoning your own process the moment emotions show up. The market will always test your patience, your discipline, your consistency. The question isn't whether you'll feel fear. You will. The question is, will you trust the plan you created when your mind was clear? Or the emotions you feel in the heat of the moment? Because profitable trading isn't built on perfect predictions. It's built on consistently making good decisions, even when they're uncomfortable. Subscribe to Mind Over Markets, because your greatest trading edge isn't another indicator. It's becoming the kind of trader who can trust their own process.